Hey folks, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, July 21, 2015. So here's a daily chart of the SPY, and we had a down day today. And the down day may or may not be the solidification, I'll call it, of the next turn. We don't know. It's a little early. Really have to see how tomorrow trades. But this would be the first sign, the first indication that this was the next top we were looking for. But I'm not ready to kind of put that in stone yet and say that was it. But we're doing well. We're on target. You know, it was in between the 212, 213. Yesterday we pierced 213. Backed off of it. Now we're coming down, and let's take a look at something else that's another piece of evidence, and then we'll discuss this interesting piece of news. So we had Apple report earnings today, and I'm doing this video, the post-market, the after-hour session is still open, so anything goes, and it can certainly turn around. But as it stands now, we're looking at, I'm going to show you the aftermarket quote on Apple, and you can see Apple's down $10. And what's interesting is that's obviously going to weigh on the market tomorrow. Microsoft is another one. Microsoft reported earnings. That's down 2.5% after hours. We had GoPro, which is resident to the Nasdaq, and GoPro is actually fluttering around. It was up and it was down. We'll just take a look at a couple of these here. You see how it was down big, then it was up, so it doesn't really know which way to go. Yahoo's another bellwether that reported aftermarket, so that's down a little bit, 0.5%, not much. But Apple's the big boy, and if Apple is going to stay down or remain down in tomorrow's early session, then obviously we're going to have some downside pressure in the market. But all in all, that's what the market was waiting on. We were waiting for Apple. Now, I just want to show you something of interest. I find this fascinating, and let's just see how you feel about it. So Apple reports earnings, and even before the folks on TV could spit the words out on what the earnings actually were, the stock was already down $7, $8, $9. Before the actual announcement hit any newswire you and I could find, or any commentary on television, no matter what station you were watching. And here's the article, the first article that came out. I just clipped the headline because I wanted to talk about this. Apple logs Q3 beat, but Q4 sales outlook disappoints. Now, here's the interesting thing. They're going to pin the reason why the stock is down on the Q4 outlook disappointing. But that's not what happened. And this is the fascinating part about how markets work, that most people, if not almost all, they just don't get it. They don't understand that this phenomenon exists. And believe me, it took me a long time to understand this, let alone believe that this existed. But once you get it, you see it with open eyes, because you see an article come out and you say, that's not the reason. Hey, here's the deal. If Apple was down immediately within a split second of the earnings announcement hitting the wire, it was down in a split second, like $8, $9, $10 immediately, or more. It was down below 120 immediately. Okay, nobody knew what the outlook was for fourth quarter, because there's nobody under the sun that could read the report that fast and get through down to what the outlook is for fourth quarter. It was down immediately, and here's the phenomenon. And now I'm going to go back to the spider chart. Okay, I want to point something out. And this is a hard concept to understand, and it's even a harder concept to explain. Believe me, I get it. Okay, how hard this is. This isn't what I want. I want the spider. Okay, so think about this for a second. Pardon me. If Apple came out with let's go back a step, okay? This is the last shorter-term cycle down here, okay? And we knew that somewhere in this neighborhood the market was going to bottom. We don't always know where it's going to bottom or where it's going to top, but we know that this is a short-term cycle, and we knew that we had one more rally or another rally coming. We don't know whether there's one more, but we knew there was another rally coming. And in my work, in my opinion, and you know this, that this is probably the last rally before we have another pretty healthy sell-off. if this is the top. We'll get into that in a minute. That's not important right now. What is important is we knew that this there was one more rally coming. Now, if Apple reported earnings, let's say last week, when the market was here, up and above the neckline of the Head and Shoulders, on a big gap higher, on a very positive day where the markets are everything is up and everybody is giddy and everybody thinks the news is good and Greece is on the back burner, China's on the back burner, nobody cares about Puerto Rico, all that stuff, okay, and the market is going higher. If Apple reported in the middle of this area here, the stock could have easily been up $10. But the fact that it reported up here when the cycle is topping out, maybe topping out, I think it's topping out, then the news, the same numbers, the same commentary, not the same commentary, the same numbers, the same report, everything in that report, all things being equal, the same stuff is perceived differently, not because of Apple, but because of the overall cycle in the market. And that's a concept that, believe me, I know it's near impossible to grasp, understand, believe. But once you do, once you believe in that phenomenon, you will never look at the markets the same ever again. And that's what happened to me years ago. And that's what started this whole thing that I'm on now. Not my strategic forecast, but the whole way in which I look at the markets. And it changed my entire thinking of how I look at everything about the markets. And once you understand that it's not the piece of news that's released, it's the fact that the cycle determines what happens with the stock, and the same news report is perceived differently as a result of the cycle. That is what's happening here tonight with Apple. Whether it stays down or not, and we find it down tomorrow morning, we'll see. It looks to be the case, but anything is possible. They could have a conference call, change things around, and stock could be 140 in a minute. Who knows? The point is that I just wanted to get that concept across, that it's because it was reported up here as the cycle may be turning down that's actually putting pressure on the stock, and then hence in turn will put pressure on the market tomorrow if the stock stays down. It's a phenomenon. It's an unbelievable concept that most people will never ever believe because they think that the stocks trade on earnings. And believe me, folks, when I tell you that stocks don't trade on earnings because nobody cares what they earned last quarter. It doesn't do anybody any good moving forward what a stock did last quarter. Last quarter is over. It was over at the end of June. No stock is trading on what a company did last April, May, and June. That's not what's happening, but that's not what they'll tell you on TV because they don't know any better. It's trading on earnings as far as they're concerned, and that's just the way it is. So we have to just take it for what it's worth, ignore it, and move on, and just understand for what it is. And I just think it's interesting. It's fascinating to me, and I hope that you find this stuff interesting also, because through this learning experience, you learn to look at the markets differently, and therefore you understand more. You're not surprised at certain things, and then you laugh at other things, and that's kind of where I know some of you are, and I've been for a long time. So, all right, let's get back to the S&P. So, if the market does have downside pressure tomorrow, and we close below today's low tomorrow, then I could say with a high level of certainty that this next top is in. But we'll have to see how that plays out tomorrow. And as it looks right now, that looks to be the case, but anything can change between now and tomorrow morning at the opening bell. So we're going to reserve the top call for tomorrow because we just can't do it yet. And then once and if that happens, then we'll be able to start talking about what happens next. But it seems to be playing out almost picture perfect. One more rally, 212 to 213. Here we are, this area here, and maybe we're turning down, and this may produce more downside pressure. But as you know, as you heard me say, that, as we move into the summer, into the second half of the year, the markets will get and remain much more volatile than they were even in the first half of the year. So this will seem like light volatility, minus this. This was heavy. This will seem like light volatility over in here compared to what we may see moving forward. And just to give you a sense, you could expect, if this is the top, and whether it is or not doesn't matter, because whenever that does occur, you're going to see things like this occur. You're going to see down moves, up moves, down moves, up moves. They're going to be sharp and fast. And, you're going to have a down move for maybe a day, maybe 3 or 4 days. Then you're going to have a rally that retraces 2/3 of the move in 1 day or 2 days. And then you're going to dump out the next day. And there's going to be big gap downs and big gap openings. And just like we see here, we saw a lot of gap ups in this zone here. We saw a lot of gap downs. We saw a lot of gap ups. And that's going to continue throughout the remainder of the next 3 to 4 months, as far as my work tells me. So whether this is the top or not remains to be seen, but you need to be prepared for that type of market moving forward and higher volatility coming. So that's going to cover it for the market today. I'm not going to go into the ES contract because, I can bring it up, but the same thing's going to apply. I don't really have a near-term downside target other than to say this week there's a high probability we're going to see at least 2100 in the E-mini, but that's not far off because in the aftermarket session we've already been down to 2107 from a close at 2113 or so, 2114.50 actually. So so you're probably going to see, if all things remain equal, by the opening bell tomorrow, you're going to see a gap down tomorrow, which does take away some of the trading opportunities intraday. For those of you who are intraday or day traders, you know that gap ups or gap downs take a lot of the steam out of the trading intraday, because things tend to open way up or way down, and it takes the opportunity away from the day trader. But that's just the way it is. So nevertheless, we should see. We took a position today in the inverse IBB, and the IBB is the Nasdaq Biotech index. And let's see, we closed at 395, trading off a little bit after market. What we did was we took a trade in the BIS, which is the ultra short equivalent to the IBB. So this will act inverse to the IBB, and it will also trade it's leveraged. Therefore, we take a smaller position in the BIS than we would normally take in any position, because it's a leveraged position, ultra short. So if the market is down tomorrow, the Nasdaq IBB, the Nasdaq Biotech, should come under pressure among other sectors, and this should be up tomorrow if all things remain the same. Okay, let's go to the gold market. Now, gold looked like it was going to put in a bounce today, and let's even bring up the intraday chart. You can see here that gold tried to rally today, and then it couldn't hold and sold off. And you see here we started out the day, this was yesterday. We started out here early morning. We tried to rally up. The market broke down later today, and we were down as low as back down in the 1098, 1095 or 6 area this afternoon, and then we rallied up back towards 1100 where we are now. It's one of those things where we don't have, let me go to the daily, we don't have the sign of a reversal day. You would have need to see something more for this to be considered a reversal day. You would have need to see a wider range day, higher volume, maybe put in a low down towards yesterday's lows and then a reversal. And then I talked last night about the GDX and that it was a huge volume day and maybe exhaustion, and it still may hold true. It was up today nicely. It was up more earlier, and then it sold off, finished near the lows. That's not healthy. And in fact, let's take a look at the intraday. You can see here that we finished closer to the lows today, put an up move closer to the lows, but the gold miners should and will typically lead the gold market, but we didn't see what we needed to today out of the gold miners. We would have it would have been nice to see this finish near the top end of yesterday's range. That would have said, yeah, that was the makings of a reversal day on volume, but we didn't see that. So I'm not ready to say that gold, isn't going to go down and retest those lows from yesterday or close to it yet. So we need the market to show us more in the gold complex, and I'll leave it at that. There's really nothing else to say until we see. We need the market to see or to show us more. Oil put in a bounce day. That's okay. We didn't hit the 49.50. Like we said, all markets don't necessarily, or any market doesn't necessarily trade in a straight line, up or down. Not out of the ordinary to see a bounce, but the bounce was paltry. It wasn't that great. And we need to see I certainly would like to see the 49.50 at a minimum satisfied, and that's currently an unresolved position in my work. So I really need to see that happen before I'm able to say what happens next in the oil market. So we'll leave that, and my guess is if we see a lot of pressure in the overall stock market tomorrow, we're probably going to see pressure in the oil market, and maybe tomorrow the 49.50 will be satisfied, and we'll have to see whether or not we hold up above or go down below that level, which will tell us the story or the next phase or the next piece to the puzzle. Okay, so that's about it in the oil market. Need it to show us more. Bonds. Let's go to the TLT. And you can see that bonds started to sell off today down towards the 20 and then reversed. So this is kind of a reversal market, a reversal day, even though we weren't at a high or a low. But this market did reverse, not necessarily on volume, but it did reverse today, which tells me that we're probably going to see higher prices coming in the bond market, lower yields, and that may also tell the story of lower prices in the stock market. These are all market tells, they're pieces to the puzzle, and you've heard me say that before. So I'm looking for higher prices in the bond market tomorrow, and I would say that it's probably in the cards that we're going to see 120 if we see follow through tomorrow in the TLT, which is higher prices in bonds, lower yields. Above 120, we'll have to see, but that's the next area of resistance that I see in the TLT. Okay, so we'll leave that there. We'll see how the bond market trades tomorrow. I'll do natural gas. Why not? Higher prices coming in natural gas. You know that this was a temporary top, saw a low. Now we're seeing another rally. Off of this move here, let me kind of refresh our memory from a longer term perspective, right? We had an up move, sideways, and we made a low, a little bit lower than I would have liked at the time, but now we're made another up move, going sideways again, and I'm expecting a move higher. Okay, so this is, a stair-step market, up, sideways to down, up, sideways to down, and the next move should be, or seems to be, the makings of another up move in natural gas for those of you interested in the natural gas market. Let's flip over to the dollar. And I know I'm running through these markets today, folks, but you know what? I spent a lot of time on the stock market and some of that other stuff. But, some of the other markets, there's not much change. And if the story's not changing, I'm not going to belabor the point. I'm not going to waste your time with it. We're just going to move on. So we're going to move on from natural gas and go to the dollar. And in the dollar, we didn't get up to my upside target at 98.60, and we reversed down. And this is a reversal day. It's a healthy down day, and this is called an engulfing candle, and that's a reversal day. And we took out basically the last 3 days of the up move, and that means to me that lower prices are coming in the dollar. And if lower prices are coming in the dollar, that could mean continued up move in oil. That's certainly possible. It could mean up move in gold, although it doesn't have to. But I know some people like to pin the gold and the dollar together, but they trade together sometimes. They don't trade together other times. I don't like to do that, but oil more so does trade in opposition to the dollar, much more so than gold does. But what happens is when you see an up day in gold and a down day in the dollar, then gold will be up because the dollar was down. But if the dollar is not down and gold is up, gold will be up for some other reason. That's the way it works. You've heard that before. You've probably heard me say that before. But there is more of a correlation to the oil market to the dollar because oil is priced globally in dollars, and you've heard me explain that before. And that's the reason why it's more believable to me that there is more upside pressure on the oil market when the dollar is down and vice versa, more so than any of the other commodities out there. However, so the dollar is down today, and this tells me that there's more downside coming in the dollar, which means that I'm looking for first target down at about 96.5, and I'm going to actually put a target in there. In fact, we don't need this one anymore. I'll just change this one to 96.5, 96.5, and we'll say that that's going to be our downside target if if the dollar should continue down over the next day or two. That's the price level we're looking for. Okay, let's see how Apple's doing. Apple's still under pressure in the aftermarket session. Let's go to the aftermarket session, and I'll bring up the 24-hour clock. And here you go. No telling how it's going to finish and how it's going to open tomorrow. But as it stands now, the sentiment is negative Apple. The Qs are down, which is highly represented by Apple in the aftermarket session. The VIX, which was, it was down earlier today, and then it recovered. So we'll see how the VIX plays out tomorrow. But if Apple continues down or stays down, the Qs will be down, the S&P will be down, the Dow will be down. It will be because of Apple, and it will be because of the iWatch. It will be because of light iPad sales. It will be because of whatever they want to make it. I don't know what the reasons will be. Let the media determine the reasons later. But all we know is what's more important than anything else is this is the reason why Apple's down. And I'll go to the grave believing this to be the case. But if this is going to be, bear with me, if this is going to be a market top, okay, which was discussed down here, okay, even before we made a low, okay, and as soon as we made a low, I gave you the upside target, 212 to 213, and if this is going to remain the high, then, and we've sold off from that high, that's the reason why Apple is down, not because of the iPad sales. That's nonsense, okay? So that's my story for today, and we're going to leave it there, and we're going to let the market tell us what to do, and so far it is doing just that. I'm David Frost, My Strategic Forecast. Thanks for tuning in for another episode of Common Sense Market Analysis.